Hey guys, Czar here. Good morning to you. Hope all is well. Happy Monday to you. Monday, March 17th, Manic Monday and rollover week. Could be interesting in terms of volatility here, guys, so be careful out there. This is the daily frame, NASDAQ, S&P, and Dow. And as you can see here, guys, in the overnight, we've had an up day form, technically, on the NASDAQ, not yet on the S&P, came very close, and not yet on the Dow. So inside day, and technically an update, but back inside of the range of Friday, today being Monday. So kind of a neutral looking picture here, maybe marginally bullish on the NASDAQ, who knows. You can see that we are pulling back now from the news reaction on the two sisters, NASDAQ and S&P 1-minute charts. That's the news reaction over the two standard deviation bands for volume weighted average price, and now pulling back in towards balance, at least getting there for the open here in the next minute or so, minute and a half. Looking at my trading grid, guys, daily chart, there it is. There's that technical update, but back inside of Friday's range on the daily, 30-minute chart and 1-minute chart on the right hand side. A 30-minute chart, guys, looking pretty interesting here as we have pulled up in the UK session over here, guys, the European session overnight. Nice steady grind up after a typical tightly wound Asian session, right? Narrow range, expanding range, maybe an explosive range coming our way starting in the next minute or so. But we had a closing candle in a clean traffic range, but not above these two wicks. And I was just telling my private group that these two wicks probably have some relative importance, given that one was formed on a very big gladiator candle in the UK session of last Wednesday. It was actually 8:30 news, big reaction, rejected down, but then tried another attempt here, guys, and rejected in the New York session the same day, the same 24-hour trading session, and then prices drove down from there. So those wicks matter, at least they do to me. And then, of course, even though we had a very strong closing day here on Friday, we did not make it past those wicks. And you can see this morning here, even on the 8:30 news, we actually matched this wick and didn't quite make that one. So now we are pulling down. What I'm going to do here, guys, is just for now, I'm going to revise this zone up like that. See that there? For those two equal bodies, and then we will monitor from there. Looking like we're going to break below the prior candle low here. We are opening up, or we have opened, I should say. There's the 1-minute candle forming, and we will pretty soon, in the next 20 seconds, have the 1-minute open range. I'll bring you back in a moment. All right, guys, so we are now into the second 1-minute candle. You can see that the open range was only 23.25 points on the NASDAQ. It'll be tiny on the S&P here, guys. 5.75 points. And so now watching, we're pressing up on both. Over to my trading grid. There's that 1-minute candle breaking back above. We have a negative moving average configuration coming in here on the 1-minute chart. Indecisive for now here on the 30-minute, and quite frankly, indecisive for now on the daily, given that we pulled back into Friday's range and doing something very similar here on the S&P. See that there? We got some overhead zones to deal with here on the S&P. That'll be important. Trying to break above to a new candle high here. Fairly strong action on the S&P, in fact. But let's get back to the instrument of choice here, the NASDAQ. As usual, guys, I will not be doing anything right out of the gates here. I'll be watching this very closely. I won't be chasing that. As you can see, guys, we've been pressing up here right into that zone that was tested with the 8:30 news, then rejected down for the next candle, and now trying it again. This could very easily break up above here, guys, and rally for the entire day or not. And that just, it's all about what the market wants to do, and we will watch the dance and decide if we want to join or not. Just watching here, guys. Pushing up now, breaking the daily high. Too extended here for me to join, of course. I think I really want to see how we do in this area right here on the 30-minute chart. But we are getting some energy and torque here for sure on the daily. And pushing up, guys. I'm just letting this thing go. I don't need to be in the move. Even if I become bullish, and I am, there's no way I can participate in this given the extension. We'll wait for some more structure and potentially join the party here, or wait for some kind of a reversal. Nothing for me to do. All right, guys, we're back, and as you can see, we have pulled all the way back to the 21 EMA. This is what I like to see if I'm contemplating any kind of a continuation move. That may or may not be in the cards here, but we'll see. Two sisters, guys, pulling back. NASDAQ pulling back more than the S&P. S&P only has two blue candles so far, where we actually have two separate legs here and a zigzag pullback on the NASDAQ. NASDAQ leading the charge here on the weakness, guys, giving back much of that move. Nothing for me to do here. Just going to wait and be very patient here and look for some kind of an opportunity. And pulling all the way back now, guys, rejecting at that key zone that we talked about at the very beginning. Notice how the NASDAQ pulled back very deeply here, guys, way beyond the 21, almost tagging the open range, showing significant weakness here, and now firming up a little bit, but nothing for me to do here. Really need to see some decisive action, but that 30-minute zone, of course, is the fly in the ointment here. Notice, though, that all three of the sisters have now made daily highs. This is that zone that is a bit of a concern, guys, when prices rejected fairly harshly here all the way back to the open range, but we'll see. It looks like it's making another run for it here. We'll see what happens if it can get up here and stay up here. It's 952, 953. This candle closes in 7 minutes. I'll likely wait for that. And we're back, guys, and as you can see, even the S&P failed to make a new high, just penetrated marginally and is now showing signs of weakness. This pullback is very deep. Whenever we see a pullback from an impulse style wave, especially near the open, that is very deep, very often has a hard time getting beyond the overhead pressure. These are captured longs, right? And they feel, okay, this thing went too far. And then as prices begin to rally, they start to unload their longs, thinking, here's my chance to get out. And it's overhead selling pressure. So I really want to see a resourceful pullback and then continuing higher into these moves. We don't always get that opportunity. And we're back, guys. And as you can see, we are failing to get back above that overhead supply, given this deep pullback here that should have continued. But again, this zone has been problematic since the get-go. Even in the face of this daily breaking, we are in a bearish overall environment, and that's key. Context is key, guys. The bigger picture feeling in this market is vulnerable, weak, fear. We still have extreme fear readings, for instance, on the CNN fear index. And those things matter. In a rampaging bull market, when we see daily highs being broken and strong 30-minute action here on the open, that's a much more bullish thing that you can really jump all over rather than being in this kind of an environment where there's so much fear and bad news kind of hanging in the air. That doesn't mean we don't have a bottom in place here. This could very much be the intermediate term bottom or not. And that's the beauty of this dance. It keeps us guessing, doesn't it? All right, guys, nothing for me to do here. This might be another no trade day. I think I had 2 or 3 no trade mornings last week, and that's very rare in 1 week. But with this tricky price action on the open, with no clear and decisive entries, and this was clear and decisive price action here on the upside, but certainly no entries. And then with this extra deep pullback when we should be rallying easily and high, that's problematic for me. What's interesting here, guys, is that the 1-minute open range is this candle right here. As you can see, it's delineated by the indicator that shows the 1-minute open range. But the big key candle was this next one. It was actually slightly engulfing. It took as an outside candle. That was the first real strong candle. It was the next candle, second candle of the session. If you make that the open range, so a 2-minute open range instead of a 1-minute open range, you'll see that we have pulled back, basically tagged it here, tried to rally, tagged it again, and trying to do something here. Who knows? But I certainly won't be touching that. But there's nothing wrong with doing that, guys. Just because you have your indicator or your idea set for the 1 minute open range, there's nothing magical about 1 minute. If the real buying and selling only comes in on the second candle, why not include that in your open range, at least in your mind's eye, so you can see how prices react to it. That's where the dynamic action happened. This is where the rest of the dynamic action is happening, right? You can see that going on there. And if you're curious, guys, I won't be taking along here, especially since the 9 is below 21, rounding EMAs, faltering at the zone, pulling back or have already pulled back into Friday's range and so on. There's nothing for me here. All right, guys, we're back. And as I just explained to my Telegram group, I will not be taking any trades inside of this range. And so I'm going to call it a day here, guys. Another no trade day. And hopefully you can see why. Happy Monday to you. And I hope you have an amazing afternoon and a fantastic week. We'll talk to you soon.